More millionaires were created in the Great Depression than any other time in history. This video is about 5 big economic events that are going to happen in 2023. It's good to be early, as you guys know, especially when you have to act on some of these things. And I've been talking about a few of these for a while now, and it's all happening now. Here's the 5 big events in 2023 that you need to know about and react to. And the economy is breaking down. That's what this channel is about. I'm trying to help you guys know what to do, how to react to this crumbling economy. And this is one of those videos where I'm going to feel a lot better if I do the disclaimer first. So you need to know that nothing in this video is personalized trading advice for you. Gold is looking pretty lively today. Last I checked, it was up $54 per ounce. And of course, silver, rhodium, platinum, palladium, they're all going up together. And expect more and more of this going forward. This is showing you how fast moves can happen in precious metals, or anything in fact, when it's so far out of line with where it should be. This is just the beginning. So if you think you're missing the boat, there's still plenty of time to get on board this train. I think 2023 is going to be tremendously strong for precious metals prices. And I hope that some of you took my, not advice, but opinion that you should get into some things like Kinross Gold, Newmont Mining, a lot of these big gold miners, because they're going to benefit from the rising prices we're going to see in gold, in my opinion. And inflation has been softening, being much less damaging and significant than most people are expecting. And I know that you feel it on the grocery store shelves, and that part of inflation is going to be the last to moderate a bit. And I don't think that inflation is gone forever when it does come down. I think that the Federal Reserve will pivot and eventually get back into quantitative easing, and they'll do it once more at least, maybe twice more, and that's when it's going to put us in a really massive, unstoppable inflationary storm. But in the meantime, leading up until that point, inflation is not as aggressive as a lot of people are expecting. And it's because they always relate it to a year ago. Inflation was relatively low, then it jumped up a lot, and now they keep looking back to look at how much higher it is. But after that jump, when you take that into account, since that point, inflation is softening, as we learned from CNBC this morning. The key inflation measure that the Fed follows rose 0.2% in October, less than expected. But it didn't surprise you, I know that. The core personal consumption expenditures price index rose 0.2% in October, slightly below the estimate. The index increased 5% year over year. That's what I'm talking about, where they look back a year ago and look, it's still a big jump. It's still a big jump, but it wasn't a big jump. It was a 0.2% increase, almost not noticeable. Once inflation in prices starts to decline faster, pick up steam faster, which will be exacerbated by any kind of recession we roll into because people will spend less money, then you're going to see inflation coming down more meaningfully. And as you would know because you watch this channel, unemployment will rise pretty significantly. And this is from CNBC also. Outplacement firm Challenger, Gray, and Christmas reported that planned layoffs increased 127% in a monthly basis in November. That's 1 month. If you want to look back a year over a year, the planned layoffs is actually 417% greater than a year ago. Job cuts in November were 76,835, and most of that came from the technology sector. Well, yeah, but all sectors have layoffs. And I ask you, do you think we're going into a recession? A lot of companies, especially the tech companies, which have lower earnings expectations going forward, are starting to say, wait a minute, we're way over our skis, we're way over to one side of the raft too far, and to correct this, to save the company, keep making more money, we need to lay off not just 5% of the workforce, not 3%. A lot of them are laying off 10, 20, 30, 40% of their workforces because they're so far over to one side, which they didn't realize when all this easy money was sloshing around everywhere. So in this time of returning to a viable operational structure for these companies, they have to be very aggressive with the layoffs, and that's just going to take a few quarters to really trickle into the numbers, to really be felt by the economy. But if you're still looking for a job, the good news is that there's still 1.5 job openings for everybody who's possibly looking for a job. Of course, that will change and expected to change markedly. Going into 2023, there will be significant layoffs. There will be a lot of pressure pushing the unemployment rate higher. And this is a very slow thing. So just every 3 months, every month, every week, there'll be more than the time before it. Now, real estate, as I told you well ahead of time, it was maxing out, it's going to come down, and now it's all playing out. Where are we seeing home prices declining? Just about everywhere, and it will get worse. It'll be like a snowball rolling down a hill causing an avalanche. But here's some numbers for you. San Jose down 9.4%. And you might say, well, year over year, that's not too bad. That's not year over year. That's 3 months. So quarter over quarter, think of it that way. Seattle, Washington down 8.2% in 3 months. Oakland, California, 7.6%. San Francisco is 5.4%. Boulder, Colorado, 4.5%. Boise, Idaho down 4.3%. What happens is when people start to see other homes declining in price, they react in a lot of ways. Maybe they lower their own asking prices. Maybe they don't overbid on a house. They don't feel fear of missing out. They're not being as aggressive. They know that house prices will come to them. It'll meet them where they are at the level that they can afford, especially underneath all these increased interest rates. You're paying a lot more for a mortgage. And people are going to start seeing this. They've been seeing it now, but they're not feeling it yet. As people feel this, you're going to see a massive acceleration in the number of people who are trying to get out of their house or who know they can't afford their house, who are willing to lower their asking price instead of holding to the line. Real estate has begun to come down, as I explained ages ago that it would, and now it's going to accelerate markedly, especially going into 2023. And in terms of a recession, we were in a recession, and now they're arguing about the wording that we weren't. And again, I just always say, just wait. 2023 is going to really make it undeniable that they can't mince the words to say we're not in a recession. You're going to feel it. You're going to feel it every day on the streets here. There will be more unemployment, house prices coming down. The loss of the wealth effect will also have an impact. The recession will be here, and it will be a tough one. And I'm not thinking recession as much as depression, but we'll see how it goes. That doesn't mean that there aren't a lot of opportunities. And that's one of the things I wanted to say to you. You want to turn your biggest obstacle into your biggest opportunity. A big obstacle is that the economy is breaking down. That's your opportunity, because while everyone else is watching it happen around them and they're taking the financial hit from it, that's when you can take advantage of a lot of these opportunities and options that I'm telling you about. Getting involved with good, high-quality gold miners is one of them. And by the way, if you want to get physical gold and silver, which I absolutely think you should, it's going to become harder and harder to come by. It's not about the price anymore. It's going to be about the availability of the thing at all. And also, it might have helped you to know to get out of the way of this derailing real estate train. Also, it might help you to understand that your job is maybe not as secure as you expected that it would be. And there's all sorts of other moving parts that you can adjust and benefit from and towards. You need to understand the whole picture of what's going on so that you can make the incremental decisions that will be best for you so that you land on your feet and you end up in a better place than you otherwise would have. So in summary, I believe in 2023, the big 5 events are going to be the gold and precious metals of all kinds soar much higher, including the mining stocks that are high quality companies that have tremendous proven and probable reserves in their holdings that they're extracting and selling. They will do excessively well, even better than the increase in the precious metals prices. Unemployment is going to climb much higher, and everything that means for the businesses in the economy and for the people working in those businesses. Inflation will continue to decline, and I'll say for a time until it flips. Once the Fed pivots and stops increasing rates and starts lowering them, inflation is going to spike strongly. And that's going to happen after the 2023 recession, or during the 2023 recession, when people are feeling a lot of pain and it's obvious. Then the Fed will say, okay, we've broken something. We're going to start stopping the increases in interest rates, and then we're going to start lowering interest rates. That will mean things like stocks will spike at that time as well. And real estate is just getting started in its decline, just as precious metals are just getting started in their increase. Real estate will cause a lot of pain for a lot of people. This does not mean you don't have opportunities. This is actually where your opportunities lie. There's going to be a lot of people who need to get out of their house for pennies on the dollar. Anybody who's ready for that, anyone who's expecting it, will act on that and take advantage of it. More millionaires were created in the Great Depression than any other time in history. This time, 2023, it's setting up to be no different. And the big pain you feel won't be in 2023, but you'll see all of the seeds that have been planted for it. All of the pieces are in place for this to line up to be eventually a big, massive, significant recession or depression. They've planted the seeds, now they're watering them. 2023 will be about these economic storms surfacing above the soil and affecting you directly. Now it's important up here, this video, you're going to want to see. It's about all the gold buying that China and India and a lot of other countries are doing right now, getting ready for what I believe to be the announcement of their new global reserve currency, which is backed by gold. If you haven't seen that video yet, I want you to see it because then you'll understand and agree with me about how all of the trends in gold buying worldwide by central banks are driving up the prices and how all the currency debasement at the same time is bringing down a lot of the global currencies, and at the same time it's going to put wind in the sails of gold prices and drive up not only the precious metals but the mining stocks that find those metals as well.